imagine a world where we have no job growth in the United States, and considering that to be an acceptable economy, you tell me, do you think that Wall Street is out of touch with Main Street? What are you seeing out there in the job market? We're starting to hear more stories along those lines. Beach cities, you won't believe the oceanfront high sale of the week that just closed, and how a whisper from the Fed just made the spread between treasuries and mortgage rates the most powerful lever in play right now. Stick around, this one's packed. The high sale of the week happened in one of my favorite neighborhoods, Cypress Cove. It's a gate-guarded neighborhood right there by Trestles. It's an incredible place to be. It feels like an entire different world behind those gates. It happened at 3824 Vista Blanca in San Clemente. It sold for $10.1 million. It was 6,900 square feet, oceanfront with 70 feet of ocean frontage. It was absolutely beautiful. Take a look at these photos. Let me know what you think. Let's jump into the numbers that matter, because here in beach cities, again, which we define as Dana Point, San Clemente, San Juan Capistrano, and Laguna Niguel, we had an incredibly fascinating week in the numbers where we saw active inventory drop from 511 properties down to 481. That's 30 homes that came off the market, either went into escrow or pulled their home back. And so we're seeing that seasonal decline in inventory that we typically see. The interesting thing is that we had seen an abnormal trend, which is we've seen in the last several weeks pendings grow from August 14th until this week. This week, however, we had the number of homes in escrow drop from 189 properties down to 166. So we're starting to see that normal seasonal decline in the number of homes that are on the market and the number of homes that are accepting offers. However, that one might bounce back as we've seen some abnormal trends with these interest rates. The fascinating thing is that the number of homes that have closed escrow in the last 30 days made a jump, I believe accounting for about half of the properties that we lost in escrow. They just closed. And so now we saw those come off before we've seen a whole bunch more homes go back into escrow. Up from 153 closings over the last 30 days. Last week, we see 165. So we had a significant number of closings in the last 7 days. But that makes you ask, how many homes accepted offers in the last 7 days? This week, we had just 30 homes here in the beach cities accept offers, where last week we had 42 homes accept offers. My best explanation of that is that we had a brief moment where mortgage rates hit 6.1% on the 30-year average. And during that time, we probably saw a rush in buyer demand. Offers were made, some more deals were put together, and that probably borrowed from the number of homes this week that went into escrow. Hopefully we'll see that number back up again next week. The days on market for sold properties in the last 30 days notched up from 44 to 46 days on market. Not a big trend there or significance in those 2 days on market, with the average seller getting $877 per square foot on their home here in the beach cities. Let's dive in and talk more about interest rates, because that's one of the most fascinating things of the moment. Just before the Fed announcement this month, we had interest rates dip down to 6.1% with anticipation of the Fed cut, because again, the bond market gets ahead of the Fed and starts pricing in the anticipated cuts. And with the mortgage rate at 6.1, everybody anticipated we have a cut this month, which we got the 25 basis point cut, but they also anticipate that we're going to see more cuts for the rest of the year. Jerome Powell's speech, however, didn't give the confidence that we're going to see additional cuts, because he seemed more worried about the potential inflation of tariffs than he was worried about the job market. Although it was a step in the right direction, he seemed less concerned about the job market, stating that job growth of 0 to 50,000 per month is acceptable, which imagine a world where we have no job growth in the United States, and considering that to be an acceptable economy. You tell me, do you think that Wall Street is out of touch with Main Street? What are you seeing out there in the job market? Do you have friends that have been laid off recently? Have they had a hard time getting new jobs? We're starting to hear more stories along those lines. Also this week, one of the Fed members who's been more hawkish made a comment about how labor is strong. And so there is kind of a conflict going on within the Fed, whether or not we're going to see more interest rate drops in the near future, and if we expect them to come down. Now, the good news is the spread is one of the most powerful tools we have right now. The spread between the 10-year Treasury rate and the 30-year mortgage rate is typically somewhere around 1.8 to 2%. With all the uncertainty in the last few years, we've watched that spread grow significantly. In fact, just back in February, the spread was hovering around 2.65%. So the difference between the 10-year Treasury rate and the mortgage rate was 2.65%. The good news is today we're hovering right at 2.2%. So that tells us that mortgage rates, without any Fed adjustments down, just with improvement in the spread, spreads has a range between 0.2% and 0.4% ability to drop in interest rates. So if we see spreads continue on this decreasing spread trend that we're on, we could be in the high fives here in a matter of a few months. But even more optimism in the mortgage rate world is that Jerome Powell's term ends in May, and we're expecting that we're going to get somebody who's much more favorable to the housing market, and we're going to start to see the Fed rates drop and mortgage rates drop accordingly. So while I don't have a crystal ball, it broke a long time ago, it wouldn't be surprising to see mortgage rates in the low to mid fives next summer, and expect that the 2026 market is going to be even hotter than the 2025. This week's deal of the week is a brand new listing in the Strand, one of Dana Point's very best neighborhoods located on Strand's Beach. It's One Beach View Drive. It's absolutely stunning, listed at $18,995,000. But I want your opinion of the price. Do you think it's worth it? How long are they going to be on the market? And who's going to be the lucky buyer that gets to live at Strand's Beach? It's absolutely stunning. Check it out. If you found this information useful or just entertaining, hit the subscribe button, follow along for more. And if you have any questions on Beach City's real estate, or if there's a way we can help you today, reach out to me here, send me a message. Let's get in touch.